I'm here with John Hawkins, Executive Chairman of Vislink Plc. Welcome, John.
Thank you.
Could you tell us a little bit about Vislink?
Vislink provides video communications through a variety of wireless devices, whether it be satellite communications, microwave communications, or more recently cellular and Wi-Fi. So we collect the video pictures and then we transmit those back to a studio. And we've been in this business for many, many years. We have many strong brands around the world, and that's Vislink's business.
So Vislink's traditional core market is the broadcast market in the developed world, which is a fairly mature market. Yet Vislink continues to grow its profits and its revenues. How are you doing this?
I think the key is in your question. Our business traditionally has been in the developed markets, and we've worked very hard to grow our business in the developing territories. So places like South America, Eastern Europe, China, Asia, these are all very strong growing markets, and we put a lot of our sales resource and activities into those markets. At the same time, we've actually reduced the overhead costs in the business by about 22%, but we've actually invested heavily in development of product and our sales channels around the world. And this combination has led to growth in the business and profits in the business.
You've just released your results for the first half of 2013. What were the main highlights from that period?
I think we were very pleased about the order intake. We grew our order intake by 32% compared to this time last year. We also grew our profits by over 40% compared to this time last year. We have a very strong balance sheet. We have about £7.2 million of cash on the balance sheet. We're not leveraged in any way, and we've just announced a very accretive acquisition in these half-year results.
So Vislink is continuing to invest heavily in new product development. What are the main areas you're investing in?
I think just generally, if you look at the products that we sell, making them more lightweight, making them better perform, and then if we look at individual areas of our business, in our satellite communications product range, we've pretty much redeveloped the whole range. And we have a product called the MSAT terminal, which is very lightweight, can be connected to satellite within 5 minutes from a journalist or a soldier in the field. And this is sold extremely well and was developed very quickly for markets. If I look at the cellular area and Wi-Fi, this is a fairly new market globally, but is growing at about 50% per annum and has gone pretty much from a standing start to a market which is around $60 to $100 million per annum. And we've just launched a whole raft of new products into that marketplace. So a lot of our development is for the new technology areas which are high growth. Another area that will benefit the growth of this business in the future are our investments in a new market opportunity, which is the security, defense and surveillance markets. This is where we're deploying our technology into these sectors where there's a very high demand for very high quality video, as well as jamming technology, which is provided by the acquisition that we've announced, which is from Amplifier Technology. This is the highly accretive acquisition that I mentioned earlier on.
You recently signed a strategic partnership with CCOM Satellite Systems in Ottawa. Could you tell us what the primary benefits of that relationship will be?
I think there's 3 main benefits for the CCOM relationship. Firstly, the product range that we're able to resell from CCOM fits very nicely into our range. Our current range is very high end. The CCOM product range takes us right through to offer a very broad range of pricing and products to our customers. Secondly, CCOM offers us access to about 400 new dealers that we wouldn't have without that relationship. and it also enables us to cross-sell our products into their dealer network. And finally, CCOM have got very good R&D facilities, as we have, and part of the agreement is that we cooperate in terms of development of future products.
John, what are the key messages for any potential investor?
Firstly, from a management credibility point of view, Vislink has reported 4 halves of consistent profit out of the 5 halves that I've been involved in this business. Secondly, we have a very strong balance sheet, as we've said, with about £7.2 million of cash on the balance sheet. We've just made a highly accretive acquisition, which gets us towards our 3-year target, which we've been very public with, which says that we will get the business to 80 million of revenue and 8 million of profit by the end of our financial year 2014, and we may remain on track to do that. We've got now a very strong product range, both those products that we've developed ourselves and through the agreement that we have with CCOM. All of these things mean that we've got a very strong base of products, extremely strong distribution, we're cash generative, we're profitable, and we're confident about our 3-year plan.
John, thanks very much for talking to us.
Thank you.